Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SITEONE Landscape Supply INC quarterly report. SITEONE Landscape Supply provides a wide range of products and services to landscape professionals across the United States and Canada. The company's offerings include irrigation products, controllers, valves, sprinkler heads, etc., fertilizer and grass seed products, control products, herbicides, fungicides, rodenticides, hardscapes, pavers, natural stones, blocks, landscape accessories, mulches, soil amendments, drainage pipes, nursery goods, shrubs, trees, perennials, annuals, outdoor lighting products, lighting fixtures, LED lamps, etc., consultative services, irrigation project takeoffs, commercial project planning, sales leads generation, technical and business management, seminars, distribution of branded products from third-party manufacturers, plant varieties, under the portfolio brand Natural Stone, under the Solstice brand name. These products and services are marketed to residential and commercial landscape professionals through a branch network and direct distribution. The stock price of SITEONE Landscape Supply, Inc. (SITE) has dropped by 14.57% over the past year, due to several key factors related to its full year 2024 financial performance. The company's net income decreased by 29%, adjusted EBITDA fell by 8%, and the adjusted EBITDA margin contracted by 120 basis points, all contributing to a decline in stock value. Additionally, deflation and lower price realization had a significant negative impact on the company's net income. However, subsequent quarterly earnings in 2025 showed some resilience, with Q3 2025 beating both EPS and revenue estimates, indicating that the challenges faced by SITEONE Landscape Supply are not insurmountable. The primary drivers of revenue growth or decline are multifaceted and influenced by various market and operational factors. On the growth side, net sales expansion, strategic acquisitions, organic daily sales increase, pricing initiatives, and rising demand for landscaping and outdoor living products contribute to revenue growth. Conversely, soft demand in new residential construction, negative pricing trends, inclement weather conditions, seasonality, and decreased acquisition contributions lead to revenue decline. These factors demonstrate the dynamic nature of market forces that impact business performance. Net income and profit margins have shown significant improvement over the past year. In Q3 2025, net income increased by 36% to $60.6 million compared to Q3 2024. This growth is attributed to improved price realization, benefits from commercial initiatives, and positive contributions from acquisitions with higher gross margins. Profit margins also saw an increase, with gross profit margin rising to 34.7% in Q3 2025 from 34.2% in the same period last year. Operating income margin jumped to 6.8% in Q3 2025 from 5.7% in Q3 2024. The year-to-date YTD net income also showed a notable increase of 13.2% to $165.2 million compared to YTD 2024. The slight improvement in gross profit margin for the YTD period is attributed to the cumulative effect of these positive factors. Overall, the company's financial performance has shown significant growth and stability, driven by strategic initiatives and operational improvements. The company has demonstrated financial stability through its ability to generate positive operating cash flow. For the 9-month period ending September 28, 2025, it reported a net cash provided by operating activities of $135.7 million. This indicates that the company is successfully managing its operations and generating sufficient funds from its core business activities. The company's debt level and interest expenses have shown some fluctuations over the past year. While long-term debt has decreased by $0.5 million, asset-based credit facilities have increased significantly by $53.7 million in 2025. Interest expenses have also risen from $23 million in 2024 to $26 million in 2025. However, there are some variations within the data, such as a decrease in gross long-term debt balance and a slight increase in interest expense for certain quarters. Overall, the company's financial situation remains stable with manageable debt levels and interest expenses. Management is optimistic about the company's future prospects. Key highlights include: the company will continue to benefit from strategic initiatives that drive growth and efficiency. It expects sufficient funds to operate for the next 12 months, allowing it to invest in capital expenditures and meet liquidity requirements. A share repurchase authorization of up to $400 million has been approved, demonstrating confidence in the company's financials. Acquisitions are planned to expand product lines, enter new markets, and achieve synergies. Improved procurement and supply chain management will enhance customer service and reduce costs. The company aims to earn volume-based incentives by meeting or exceeding purchase targets with select suppliers. The company has a history of paying dividends to its shareholders, as explicitly stated in the financial summary. This is further reinforced by specific references in the document to payment of dividends and distributions permitted under negative covenants on pages 32 and 53. Concerns about inventory buildup and supply chain disruption. The company's financial summary reveals concerns about inventory buildup, which may lead to supply chain disruptions. The data shows a significant increase in inventory costs, with a $13.2 million rise in Q3 2025 compared to the same period last year. Furthermore, inventory levels have increased by $45.4 million year-to-date in 2025. The company has also acknowledged inventory buildup as a concern, indicating that they are purchasing products ahead of tariffs, which may lead to overstocking and potential supply chain disruptions. The higher inventory levels at the end of September 2025 compared to the previous year further support this concern. These findings suggest that the company should reassess its inventory management strategies to mitigate potential risks and ensure a smooth supply chain operation. That concludes the financial summary for SITEONE Landscape Supply Inc. Feel free to comment below, and I will be happy to answer them when possible.